My name is Sam Lark. I work for Leicester University as the project manager for Leicester Startups Co-working. Been in post for about a year. My predecessor, Pete, is in on this call. So the project's been in existence for a couple of years, and we've got another 6 months of funding to June of next year. So we're very grateful to the LEP for funding the project. Once it's finished, though, a community interest company has been set up. Ben Revilius, co-host, will tell you more about that in a moment. So this isn't going away anytime soon. Yeah, so we've got 7 pitches for you this afternoon, and a lot of thank yous and a bit more housekeeping before we get started. But Ben, if you could just, do you want to unmute yourself and introduce yourself and talk about the kick, perhaps?
Yeah, that's great. Hi, everybody. Thanks for so many people coming out to watch this. Really appreciate it. So I'm going to just talk a little bit about what we're trying to achieve with Leicester Startups in general. So I think everybody knows that innovative businesses are a good thing. They create jobs, earn better wages, help retain graduates, etc., etc. But we believe they have one extra lesser known benefit, and that's partly because they're not in competition with each other. And that's hugely significant because it opens the door for levels of collaboration, peer support, and helpfulness that we believe can be transformative for an area or a region. So we're trying to nurture that sense of community in Leicester. And if the amazing help that we've had on this accelerator from the various mentors, experts, judges, and the participants themselves is anything to go by, I think we're already succeeding. So this is our first go at running an accelerator, and it's been quite a learning experience for us. But I wanted to thank Sam in particular, who's done an incredible job of pulling this together. We've sort of daydreamed about running accelerators in Leicester in the past, but Sam was really, really keen that we should actually do it, and here we are. So this is the culmination of a hell of a lot of work, particularly from Sam. So I'm ever so happy, very, very thankful for that. If you like what you see today and you are part of an existing startup that's just got off the ground, we are going to be running this accelerator again in February, and we'd very much like to talk to people who are interested in that. We also offer all sorts of other supports, including introductions, mentoring, startup weekends, accelerators, and hopefully once we get back to some sort of normality, co-working space. So lots of different ways that we can help startups and help startups help each other. So if you are a founder or you're thinking of becoming a founder of an innovative startup with a potentially scalable business model, we would love to hear from you. So enjoy the rest of the presentations.
Thanks, Ben. All right. So yeah, there are lots of partners on this project. Very grateful to the 6 in particular, and we've had lots of supporters or sponsors. A big thank you to these folks, particularly Jim Shields from Twist and Shout. He's been very generous with his time and resources. And thank you. Yeah, well, Ben, I think you overplayed how much contribution I played, because you started this whole thing off 7 or 8 years ago. So I think the biggest pat on the back goes to you. Obviously want to thank all the mentors on the accelerator. There are literally too many to mention. They just, I think we had about 15 engaged with our startups over the course of the past 6 weeks. Big thank you to the rest of the team, people like Reginda, Manish, Sean Conway, Pete Hitchens as well. You're not going to get off without thank you. And of course, the panel. So we've got 5 very experienced panel members with us today. So if each of the panel members could just give us 30 seconds to a minute of who they are and what they've done, that would be really useful, please. Can I start with, I'll start with Leanne, if that's okay.
Yeah, good afternoon, everyone. Great to meet you all. My name's Leanne Bonner-Cook. I am the founder and CEO of a company called eBait. The reason I'm sat on the panel today is I have got a lot of experience in starting up businesses to a point of exit, and I currently run my own early stage business today. So hopefully I'll be able to give you advice based on some of my experiences that I've had to date.
My name is Jim Shields. Some of you know me already. I am the founder of Twist and Shout Communications 27 years ago in Leicester. and also more recently Twist and Shout Media, which is a publishing company. Both companies I sold in October of last year, and no, I had no idea there was going to be a pandemic, but just fortunate timing, so I was blessed. But I built both companies with strong help from a brilliant team, yeah, it's been enjoyable hearing people's stories and journeys. So hopefully I'll bring some of the banging my head against the desk for 27 years so you don't have to type of wisdom to the party. Thanks, Jim.
Sam Tubb next, please.
My mute button. Hi all, yeah, Sam Tubb. Nice to meet you all, those I haven't met. I've been in the angel investment space for about the last 10 years. My original career was in management consultancy to financial services, so quite a financy background. I specialise specifically in seed funding, so very early stage. I've made 5 or 6 investments, generally invest time as well as money. I have very much a kind of an active investment mindset. I'm not sector specific. I'm very much looking for great ideas and specific qualities in terms of individuals and how they approach their business idea. My most successful investment to date was ScholarPack, which is a cloud-based management information system for schools, primary schools specifically, that exited in May 2018, and I've remained on with the purchasing company as a non-exec. So I'm looking forward very much to hearing all these pitches.
Good afternoon, everybody. Very much looking forward to today's session. I own and run 7 angel investment groups, so I think we've got about 750 angels, high net worths and family groups. We typically invest the £100,000 to £500,000 seed stage. We're sector agnostic, much like Sam was talking about, as long as the business is ethical. We really do look at manufacturing, engineering, tech, any sector. I live in pitch sessions. I just seem to spend my life in pitching sessions. So really looking forward to what Leicester's got to offer today. Very excited, and good luck, everybody.
Hi, everyone. I'm Russell Copley. So we run the investment readiness program in Greater Lincolnshire and have done that for the last 7 years. We've just won the contract with the Leicester and Leicestershire LEP to set up a new investment readiness pilot across Leicester and Leicestershire. In addition to being an investment advisor, I'm also an investor. I've got, I think, 4 live, well, one's a bit ropey, active investments in other people's business, as well as my own business. We as Martin will know, because he was there last week and has been a panelist before, we run an annual event in Lincolnshire called Taming the Dragons, which is an unashamed rip-off of Dragon's Den, but just with nice people rather than TV people. We designed our own accelerator program, which is this one, a couple of years ago, which timing is perfect. We span out as a separate new entity in the middle of the world's biggest global pandemic in May of this year. And then for completeness sake, because I've seen Lewis is in the audience, I chair the Regional Advisory Board for the Midland Engine Investment Fund. So I am the RAB MEIF chair, if you like acronyms. And I'm really looking forward to this afternoon.
So, yeah, let's get on with it. We're going to run in alphabetical order. So, Sukhvir, would you like to start, please?
Okay, so hi, everyone. I'm Sukhvir, the founder of Girls Lead, and we help girls as young as 8 to 12 years old start a business. So through my professional experience and experience talking to parents, one of their biggest concerns about their child is that they grow up happy, confident, and successful. But this comes with a lot of challenges. One of them being that the education system sometimes is not as varied and has a heavy focus on academic subjects. Another being time, balancing, juggling family time, fun playtime with children can be difficult. And also right now, women are less likely to start a business, half as less likely than men. And so in order to have a really big impact, we have to have a really different approach to enterprising education. So at Girls Lead, what we offer is a varied package support around a business box, which is a subscription box. This support is around digital workshops, a blog called Begin Become a Leader, where we highlight local entrepreneurs and people in work on our blog, and resources targeted at parents. So how our box works is that each month a child will receive all the bits they need to create a product. This would be an arts and crafts activity. And then they will complete an enterprising education activity, finishing with writing their own pitch, where they then try to sell their product to their parents. Currently, we offer a subscription and one-off gifts, where our subscription is priced at $19.99 with 37% gross profit, and our one-off gifts are priced between $19.99 and $21.99. So currently, our traction has predominantly been through social media. Before starting Girls Lead subscription box, we had a network of female founders, and then COVID happened, so we decided to pivot. So once we pivoted, we then have been able to grow our mailing list, grow our social media presence, and currently we've sold 3 boxes, 1 subscription. We've had 2 social media and we've had 2 social media giveaways. So currently the population is made up around about 51% are females. So we can assume that 3 million households have at least one girl in the house. With a rising subscription market, in the first year, we're looking to engage only 0.01% of the population. So specifically, our target consumer is parents aged between 38 to 55, where they're active on social media, middle class, good corporate job, living around the south of England. And then we've seen that specifically, we've had 2 segments, one being mums and parents, and the other being family members who then gift our product to young children in their lives. So our direct competitors are, so our main competitor is based in the US, and then in the UK, boxes like Toucan Box and Lala Box are boxes that focus on the arts and craft element. And then our indirect competitors are companies like Girl Guiding and Ultra Education, who give enterprising education to kids, but more in school-based and workshop-based. So our team is made up of 2 members, myself and Zainab. So I look after the curation of the boxes and the development of the business. And Zainab supports heavily with the social media strategy, as it plays such an important part about how we reach our consumer. So how the future looks like for us. So within the next 6 months, we're looking to build our reach. So we're going to do this through brand reps to try to grow our subscribers to around 200. And then at that point, we can look at how we can reduce the cost of our boxes. We also want to explore a different customer segment, which would be schools. So my previous experience was heavily working with in schools in Birmingham and some in Leicester. And so we want to use this experience to see if we can offer a blended approach to schools. And then we would like to build up our website to include a digital element and offering for parents. At the end of year 1, we hope to have around 440 subscribers per month. And we've based this on looking at other subscription boxes growth in a year, specifically looking at a case study that was also based in Leicester, who also sit as an advisor for Girls Lead. And so are you ready to help inspire the next generation of female leaders? Then please get in touch with us and we'd be really happy to have another conversation.
Excellent, thank you, Shafir. So over to the panel. We've got 4 or 5 minutes for clarification questions, follow-up questions.
I have a question. So, Veer, nice to see you again. How are you?
Good, thank you.
Yeah. The social seems a little bit low at the moment. What sort of content are you putting out on social?
So we've been looking, so the current kind of content we produce is like activity sheets for parents. We have on our social media, a lot of it is about empowering young women and that kind of narrative. What we are trying to now implement is creating a group of ambassadors for Girls Lead, who would then create, who would then be like brand reps essentially, and that will help to increase our engagement on social media.
Right. Okay. So you do give some free stuff is what I'm asking.
Yeah, yeah.
I think that's
and we have like a blog where we share resources with parents, and we also are just in the workshop section that we will be offering. It will be like a digital kind of free thing available to parents.
Okay, thank you.
So great. Hi, it's Russell.
Hi.
Quick question. So 0.01% market penetration at the end of year one. What does that equate to in numbers?
It was 440 subscribers by the end of the year.
That's where you get your 440. And then
yeah.
a kind of follow-up question. So you're based in Leicester, your experience is in Birmingham, yet your target market is the south of England, middle class, 38 to 55.
So what we found that...
Just ruled me out, by the way.
Yeah. So what we found that, so I'm both based in Leicester and Birmingham, sorry if that wasn't clear. But what we found when we started getting the boxes out there and getting feedback, and a lot of the people who were getting, who were interested in the product were based in South of England. And also there's research showing that 50% of subscription boxes are purchased by people who live in London. And so that's why we're looking to target that area.
Okay, thank you.
Hi there, it's Martin. Congratulations, well done. It's never easy.
Thank you.
Especially to go first.
Thank you.
So 2 or 3 questions, some of those related. So firstly, I was trying to understand who you are as a business. And I'm still not 100% clear. Are you an EdTech business? Are you a subscription box business? Are you a training company? Are you all the above? So I didn't get that. If you could just elaborate, thank you.
Yeah. So we're starting off as a subscription box. We basically, in my previous experience, I have experience in training children in enterprising education. That's where it might have got confusing. But yeah, we're essentially a subscription box. But as we kind of grow in the next year, we want to kind of focus on a kind of blended approach to learning, where there will be some sort of digital offering to our physical subscription box.
Okay. And if I could just understand, are you training the trainer? So is your product, because if it's aimed at 4 to 15-year-olds, I was just wondering how that content worked. So are you looking to train the parent to train the child, or are you training the child direct? How did that work?
Yeah, so the content within our box, how it works is that we'll have like a generic leaflet that will go over the theme of the box. That will be for the parent, but the specific resources, they're all aimed at the child. So the resources so the subscription box is made up with resources where the child will be able to follow the concepts and understand them, then complete an activity where they get to, like, for example, this month's box was around customer personas. So there's enough, so we have a leaflet explaining to parents what it is, and then the activity is aimed for the child.
Okay, thank you.
Well done, Safika. I thought that was a very good pitch, so well done on that. A question from me really is to get those subscriber numbers up, what is going to be your outreach method for doing that?
So we've explored different types of way of doing this. First with being social media and looking at our, so like I said before, looking at how we actually target and promote and create brand awareness. So doing that through ambassadors and reps. We've also been looking at how we can, like where girls kind of are, and seeing if there is a possibility of partnering with other organizations who can help build our outreach a bit more, like Girls Guiding.
Hi, Sophia. Hi. Well done. Just one further question. A few things have been covered, which is great. Can you articulate what you think the impact is going to be on the girls who subscribe to the boxes, and how are you going to kind of measure and show that as your service grows?
So the biggest benefits of the box that children can get is increasing confidence. So a lot of the activities included are around getting children to think about like skills that they might not every day think about, and really trying to engage them in different activities. There's a positive element of getting them to be involved in arts and crafts as well, really getting to them to think innovatively about how products are actually made and how they get into market. And then the kind of wider picture as well is that we're trying to build a community for girls, especially those who are interested in entrepreneurship, or even just being a strong, powerful leader. And we do that through our website and our blog. And what was the second part of your question? Sorry.
Yeah, so how you're going to measure it and then communicate what the impact's been.
Yeah, I think within the first year, it's been all about trying to validate, can we reach as many girls as we kind of want to? And then I guess the impact can be measured through looking at how many families actually enjoy the box and the feedback that we get from them. As we grow, I would like to hope that we would be able to get some sort of, obviously if we're getting children when they're between 8 and 12, as they then enter adulthood, there's a big kind of gap. So there's loads of short-term things that we can report on by getting feedback from the boxes. But the long-term impact, like them starting businesses or going to jobs, is something that perhaps we can look into tracking.
Well done, Sukhbir. That's great. We have got a quick question from someone in the audience. I think we can just squeeze it in quickly. How will you encourage sustainability or reducing environmental impact?
Yes, this has been a massive thing when we've been looking at where we get our resources from, and what the kind of fun thing about the box is that from the activities that we get children to do, we can set themes like sustainability, because it is really important, but it's also quite important in how we create the boxes that we do. Great.
Good answer. Thank you very much. Well done. You can take a deep sigh breath. Prabhav, Megacart, next, please. If you could share your screen and start pitching.
Sure. Everyone, this is Prabhav Pathak from Megacart. We are Ocado for Indian groceries. I'll start with the problem first. Just think if you would have to travel 30 minutes to 1 hour to get your groceries. That is the case with a lot of Indian families that are staying in non-Asian populated areas. If you see the map on the right side, you'll be able to see the spots. Those are the places where you'll be able to find Indian groceries easily, because it's an Indian populated area. So anyone who is living outside the radius of like 5-10 miles of that area, it's difficult for them to source their groceries. On top of it, the variety of Indian groceries and snacks are also very difficult to source. They are not available everywhere. And the convenience to buy Indian grocery online is not available right now. You can find there are some options available, but they are very expensive, and you can see they're artificially priced. And there are, in terms of Indian groceries, the Indian diet is more with a vegan vegetarian diet. There are more than 100 fruits and vegetables, which are very, very difficult to source, even in those highly Asian populated areas that I've shown here. Solution. So we came up with two different models. One is Megacart local and one is Megacart national. So what we have done is we have set up our local store in Leicester right now. And what we are doing is we have recently started delivering in areas around Leicestershire with our own delivery network. And on the same time, what we are doing is we're using DPD to deliver all across the UK. So what we are doing is we're delivering in Leicester and areas around Leicester with our own delivery network. And at the same time, we are delivering all across the UK using our next day delivery service using DPD. And with the local model, we are able to do same day delivery, while with DPD, it's next day. And the main aim of using DPD is to get enough customers in certain areas that we can open our local model in that area. For example, right now we are just in Leicester, and for very likely from our customer base, we can see that we have got good customers in London. So we are thinking the next local network will be in London. In the same fashion, we want to open more local stores and cover the whole UK market. So I've got a graph which explains the Indian grocery market in the UK. So if you see on the top, it's affordable, bottom is expensive, left offline, and right is online. So if you see the top right left quadrant, which is big Indian grocery store, these stores you'll only find in highly Indian populated areas. You'll find good variety of products for sure. The prices will be good as well, but the reach is very less. Now there are very few. You can literally count them on your fingertips. If you see offline and expensive, and they're small Indian stores. These stores are scattered around the UK, but they have very less variety. The costs are high, and the reach is less again because they are offline. Now on the bottom right quadrant, we have online and expensive. There are a couple online grocery delivery service, but they just use DPD, and you can see the prices are artificially overpriced. They have good variety, but the costs are high, and you can see the reach has gone up. We want to target this quadrant, the top right quadrant, which is high variety, low cost, and high reach. The product flow. So we maintain all the inventory. So if a farmer, we get produce from a farmer or manufacturer or a distributor, that comes to our Megacart fulfillment hub, and from that hub, if it is a local delivery, we use our Megacart local, and it reaches the customer. Or if it is somewhere outside of Leicestershire, it goes to DPD and reaches the customer. Traction. So we started pre-COVID. Basically, we didn't start because of COVID. We started in October 2019. We started with just on the methodology of lean startup. We literally made a PDF, and we made a WhatsApp. We shared it with our friends on WhatsApp, and we saw like if people are actually willing to buy the groceries online or not. By the end of February, we had 500 customers, and by the end of March, we had 1,500 customers just on WhatsApp. And because of COVID, we got a good boost as well. And as it was all manual, like we had, it was very difficult for us to manage all these 1,500 customers just on WhatsApp. Yeah, so we had to close it for some time as I had my final year, and we were operating on WhatsApp, and it was not feasible for us. We started back in July, when we started delivering using DPD. In September, October, we ranked #1 on Trustpilot. We've got 4.8 rating, and yeah, some of the reviews you can Google that as well. The team consists of myself, Vikram, who he exports in Indian groceries. He has got 10 years of experience just in fresh produce. That is what is needed. Like, earlier when I explained the 100+ Indian fruits and vegetables. So he is an expert in that. Wajid takes care of the operations, logistics side, and Shantanu takes care of the IT. Like he's a new entrant. He has just taken, he started looking into the IT now. Market size. So I'm just showing the whole TAM. Total available market, which is 8.1 billion. So there is, if you look at South Asian population in the UK, which is 4.5 million. Competition, we have got some local offline competition, like these are the big supermarkets. If we see online, we have got Red Rickshaw, Just Hat, and general online, I'll say Ocado, Asda, Amazon is big. They're coming into the grocery market. Online comparison. So in terms of variety of fresh produce, we have a very good variety of fresh produce because Vikram has an expertise in Indian groceries, and he's been able to get all the different kinds of fresh produce. In terms of general groceries, there is still an improvement we have to make. We're not very good. We have good variety, but not a great. In terms of price, we are good. In terms of delivery model, everyone is using just courier party, while we are using our own delivery network and courier as well. And these are the Trustpilot scores. Roadmap going forward. So we are hiring 2 more developers this month, and in January we are starting Megacart Retail, and we are also starting Megacart automated WhatsApp system. Like we are removing emails, and we are moving all on WhatsApp. Like if you place an order, you receive notification, everything just on WhatsApp. In March and April, we are planning to get a subscription-based model where customers would be would be able to order free grocery deliveries for a certain amount. And yeah, so we plan to open the next local model, open another local center in May and June, which is before mango season, and we want to open a 3rd local store before Diwali this next year. Thank you.
Thank you, Prabhav. Questions, clarification, questions, follow-ups from the panel members?
Yeah, I had a couple of quick ones. Thanks, Prabhav. Great presentation. Just two quick ones. First is around the population. You showed the slide of what the total 6.5 million relevant population is. How does that break down between the kind of 5 or 6 high density hubs versus the rest of the country? And the second question is, you look as though you're going to be able to, or you are providing better prices. Why are you able to do that versus the other online players like Red Rickshaw and the others that you popped up?
Oh, sure. So in terms of the population, we have seen that the density is more towards south of England, and you can see like it gradually fades when it goes to north. And there's a bit of rise in near Manchester, Liverpool, Leeds, Yorkshire side. But yeah, the most of it is in south of England. What was the second question again? Sorry.
And how can you provide cheaper prices than the other online players?
Yeah. So if you see right now, everyone is just other online players. They're just using courier companies to deliver their groceries. And what we have seen, like, with our own delivery network, we are able to provide, because the delivery, you have to pay DPD a good amount of fees. And we have seen, like, with our own delivery fee network, we are able to reduce the delivery cost. And so they're not able to provide this a better price all across the UK right now, but yes, across Leicestershire, yes, we are able to do that. And when we expand into different local stores, we'll be able to provide them as well with the same prices.
Great, thank you.
I have a question. Good presentation, I like it. Certainly moved on from the last time we saw at the beginning of the accelerator, so that's good. I feel like there's just a couple of areas that I'm interested in, but one particularly, why WhatsApp? It feels like a lowball platform to deliver a business on, to me. And I'm concerned about security as well.
Yeah, so in last 3-4 months, WhatsApp has launched its own API, and it won't be something that we would be using on our phones. It would be all operated from computers, and it is way more secure. Like, we won't be able to access their information and stuff like that. In terms of why using WhatsApp is, we have seen in terms of Indian market, like, people use WhatsApp a lot, and in some cases you'll see, like, in very few cases you'll see that people might not have email, but they will have WhatsApp in Indian community.
Yeah, I understand that.
Older people. And what we have seen from, like, because we started on WhatsApp, we have seen, like, the engagement that we got on WhatsApp. We had 1,500 customers just on WhatsApp. So the engagement that we saw on WhatsApp was very good. It feels more convenient. Like, for example, if you place an order, as soon as you place an order, you receive a receipt on your phone that this is my order. You are able to see. It feels like email is a bit old-fashioned compared to, like, WhatsApp. Like, it's more convenient.
I think the difference between email and WhatsApp, and email, neither of those are trading platforms.
Yes.
For e-commerce. Email is not a trading platform for e-commerce. So my point is do you think one day you might move to a purpose-built web-based selling platform, a proper e-commerce platform?
Yeah, so right now we are not taking orders on WhatsApp. It's just it all comes from our website. We only have a website, and all the order comes from the website. All we want to use WhatsApp for is notifications and
oh, fine. Yeah. Okay.
Yeah.
All right. I'm glad you clarified that. Sorry. Okay. Cool. All right. Because if I was ordering things on WhatsApp only, it would get lost in a river that comes through my WhatsApp account. I'd never find anything, and it'd be a nightmare. But I just worry. I worry that you'd lose the Post-it note with your password on, and you'd be out of business in 7 days. You know,
Hi, Prav. Well done. I was really following on. I'd latched on to a similar point as Jim. And I suppose my major concern was around, if you're going to be using an external device that's an integral part of your business, WhatsApp, I was trying to see where the value would be within your business when you come to sell it. Because you're using an external resource rather than having that intellectual asset as part a part of your business?
Well, if you can please elaborate a bit, like I was not able to get the correct question.
I was just, I don't know if it's a question as much of a concern that you're using an external resource, WhatsApp, to manage some of your technology, and you don't own that, which meant that if a competitor wants to come into the market, it's easy to emulate. But I was wondering where you saw the value in your business when you come to sell it.
Well, yeah. So as I said, like, people, what I've seen, because right now we are not taking orders and everything on WhatsApp, but the reason why we want to move to WhatsApp is, like, because of the experience that we had with our customers on WhatsApp. For example, like, it won't be just used for notifications, but if we will have an automated chatbot on it as well. Like, if a customer places an order, like, they'll be able to an automated chatbot will be able to solve all the answers as well. If they have any queries with the orders or anything, the chatbot would be able to help, which we have to work a lot on. But that is why I see a lot of benefit of using WhatsApp rather than just like, a simple email going out. But also, if a customer is not willing to use WhatsApp, we will still have the email system on for them. Then there will be a preference check.
Okay, thank you.
Prabhav, hi. First comment, great pitch. I love the intro. Ocado for Indian groceries. It's very clear, very simple, very easy for your audience to understand a kind of who you are and what you are. So that triggers two questions for me. The first of which is your fulfillment hub, which sounds to me like a massive distribution warehouse that you're going to import overseas goods into and then use to distribute. That's exceptionally capital heavy. You're going to have a huge amount of working capital tied up there. And you're talking about fruit and vegetables with a very limited shelf life. So there's an area of concern around there. Yes. And then the other, it's not a question, another observation. If you're going to become the Ocado for Indian groceries, have you not thought of partnering with somebody like an Ocado and becoming a specialist element of their offering?
So in terms of the second question, I'll say, like, we need to prove ourselves. We need to, it depends, like, how we are able to grow and how much market we have. Maybe there is a possibility, yeah, in the future, I'll say.
Okay.
In terms of the first question, yes, definitely that is kind of concern. Like, we have to, there will be a lot of inventory there, and that is why, like, we have Vikram on the team who, especially the fresh produce, it's difficult to maintain and, like, get the groceries done, get the perfect quantity of groceries as per the order. So right now we have retail as well. Like, we at the same fulfillment center, in the front we have a retail and at the back we have the fulfillment center. Okay. So yeah, the most of the groceries, like, the important goes to the to the online orders, and the rest goes to the retail store.
Okay, thank you.
Hi, thanks for that. I thought it was a good pitch, and some of my concerns were the same as what Russell has just raised. So around, you was talking about the breadth of goods that you were going to be able to store and or stock, and therefore it's around stock availability and fulfillment. So my question was, when you were talking about opening up other hubs throughout the UK, are they going to be shop-fronted hubs or just purely fulfillment centres?
With shops in the front.
Thank you. Well done, Prabhav. Your time to relax.
Thank you, guys. Thank you all.
So next up, we have Newny, who are also providing the chat functionality in the background. So Mukhtar, do you want to share your screen and tell us all about your startup?
So hi everybody, my name is Mukhtar Mahmood. I'm one of the co-founders of Newny. It's an audience, it's a live Q&A and feedback tool, mainly for organizations that use webinars and other virtual events as a customer engagement or customer acquisition channel. So what are the problems that we've identified? As you all know, i.e. why we're sitting here today in a virtual event, a lot has changed in 2020. The market conditions have completely changed. Businesses now are starting to look at different avenues to market themselves in a more globalized world that we live in today in this virtual sense. And so right now, a lot of businesses that are new to the webinars and virtual events are starting to struggle to manage their KPIs, or they lack experience in managing the audience engagement. So this screenshot here is an example of one such event manager that's struggling to figure out, how do I manage my virtual event KPIs, and how do I make sense of all of this data that's coming through. And so that's what our opportunity is here. So what we've done is we've improved the live Q&A experience, and we've optimized what organizations can learn from their events. And so what we've done is we've given the businesses that lack experience in virtual events, we've given them the tools that they need to optimize their KPIs, and to also position themselves better in the new market conditions that we find ourselves in. And so who are we? I'm Mukhtar Mahmood, as I said. I have some experience in running virtual events at university and afterwards. I'm quite involved with the TEDx Leicester team. And I've also had a previous experience working in startups. In my the previous company I used to work at is a Kickstarter company, and they produced an IoT product. And afterwards, I also helped launch a web development agency that's still running today. My co-founder here is David. He's the technical magician behind this. He's also worked in really fast-paced startup environments before. He's been involved in organizing in applications that have garnered hundreds of thousands of users. So we're competent in developing this. So how does the product work? As some of you guys have tried already, thank you guys so much for trying the product today. It's 4 simple steps. We create a unique URL for the organization. You join the live event, you ask your questions anonymously, and then you leave your feedback afterwards. The feedback functionality isn't out just yet, but that's going to be in the next version in a couple of weeks' time. And so the main functionality for the attendees is to improve to make them more interactive, and just to improve their experience of asking questions and seeing what other questions other people are asking. And so what key benefits are there for the organizer? So for the organizer, there's 4 main things. They understand what topics people are sharing, depending of course on the type of virtual event. So for example, in this case, we'd know what questions the audience might have more for one particular talk versus the other. So you'll discover, if you're using it as a marketing tool, you discover evangelists or new people that have attended the event. So we give you some really interesting KPIs and points for you to really optimize your learnings from that event itself, and then use that later on to have strong follow-up conversations with the attendees. So whether that's for business in terms of prospecting, or if it's just to build a membership tool, for example. So if you have a community or a membership and you want to get more users in, you'll be able to understand who you want to who to have conversations with afterwards. So when the event is over, we have a post-event analysis that has all of that data that I just talked about here. We give you a nice little spreadsheet, a spread of information that you can then use to understand how things were going on. We also give you a live event counter, just to show you how engaged the event was in real time while the event is going on. So what have we done so far? We've done 5 virtual events recently. We've got about 300 plus prospects waiting on our waiting list, and that's growing every day. We've had about 250 people and counting that have engaged with the platform that's helped to shape what it is today. And these are some of the organizations that we've worked with. So just some key stats. There's been over 1,000% increase, a tremendous increase in virtual events, of course, because of the situation we find ourselves in today. Our target total addressable market in the UK alone is a potential annual recurring revenue of nearly £10 million a year for us. There's over 1.3 million business events that occur, and that's our target. And about 40% of the UK visitor economy is based on events. And this particular stat is for pre-COVID-19. So the majority of people that came to the UK, about 40% of them were for event-related activities. So our key competitors, so some of you guys might know Slido and Mentimeter, huge companies, 150 plus employees. So what we've done is we've priced ourselves significantly, slightly lower than them. And of course, the things that you can find using Newny is a lot more information you can get from our particular price point. and the data they'll give you. For example, one of them is the user analytics. For example, they don't give you that at this particular price point, and also the surveying, for example, the feedback form. And so those are sort of the way that we've positioned ourselves, is to focus more on the prospecting and the aftermath and the event data more so than the actual audience engagement that happens during the event. But we do have plans to introduce new features. For example, Word Cloud is the next one in line, and also to integrate with platforms like Zoom and Teams so you can use it natively inside the application. So our 6 months target, in 6 months time, hopefully we want to be able to get to a position where we're sub 5% churn rate. We've reached 500 people using the platform. We've hit 4K recurring revenue, and we're ramen profitable. And so once we hit these targets, we want to then look for a potential angel round once we hit those targets. So yeah, so that was nice and quick. I tried to keep it short. So yeah, that's the talk. But if you're interested in, there's my email. And if you're interested in using the platform yourself and trying it out, please join our list on Newny.io.
Any questions, clarification questions, follow-up questions from the panel?
Thank you much. I thought that was good. One of my questions is, I am still struggling to see what the real unique proposition is here, because these tools have been out, like you say, you mentioned like Slido there, but there's Vvox, and there's been several that have been on the market for a long time. And so is price your really only differentiator here?
No, the main sort of differentiator is the aftermath of it. So the way that we've done the audience engagement is we've differentiated ourselves mainly with the user experience is different, and also what we give you after. So as an organization, we've also managed to sort of differentiate ourselves on the vertical that we've chosen. So we're targeting organizations that mainly want to use as a prospecting or a customer engagement tool aftermath. So for example, if you're an organization that's using webinars as an event marketing tool, for example, using our platform, we're the only ones that can tell you who has been asking those particular questions and what is their background, so you can match that data later on with your HubSpot or your other information. Those are the things that you can't find in any other audience engagement tool.
How are you, Mukhtar, it's Jim, how are you marketing this? How are you, because it's essentially a B2B sale, what challenges are you coming up against and how are you doing it?
Yeah, so at the moment, the way that I describe it is it's mainly for organizations that, using it for customer acquisition, as a customer acquisition thing. So we're targeting event marketers and other sort in the B2B market, we find some organizations that are new to, for example, trainers, people that provide training, coaching, and things like that. They usually have a free event and then they have a paid event. So for the free event, they want to optimize that, for example. So they use Newny to host their Q&A sessions and then use the data we provide to have follow-up conversation individually with potential prospects and via on email or wherever else. So for example, if you didn't get through to a question that they might have asked, you can say, hey, you left this feedback here. And that was quite an interesting survey or survey response to our event. I want to have a follow-up conversation with you. So that's how we've sort of positioned it, and we've had decent response rate from event organizers.
Great, thank you. That's good.
Hi, Mukhtar. Quick question from me about pricing.
Yes.
So you said to Leanne that you're not kind of pricing to the bottom. You're not trying to undercut your competitors, but you've got a very different, very interesting pricing model. Your price point £7.52. It's a bizarre number, and B, per 2 users when everyone else is £8 or £8.99 per user. What are your trials with your 5 pilot users? What have they told you that suggests that A, 752 is better than 753 or 750, and B, why per 2 users?
Yeah, so what we've found is a lot of organizations that we've worked with usually have more than one admin user. So for example, this is a great example. So Sam would be, hosting the main thing, but then you'd have Manish in the background managing things. So there's always 2 people there. And then usually the way that the other platforms, they price out individual, so £8 for you and £8 for you. And the 752 is we've converted it from dollars, so it's $10 a month. Right. And so conversion to the British is £7.52, and so that's why we've decided to use that particular price point. So there's a few different points when you look at all the other competitors. There's a few things. For example, they don't give you the single sign-on option that we do. So ours is more secure, is more streamlined. So the way that we've targeted it is we're trying to emulate what Calendly has done to the scheduling market. So they've kept it really simple and straightforward. with their pricing model and what they offer. So we're trying to emulate the same thing, really simple, really beautiful user experience, really simple pricing. And that's the way we're trying to match in our market.
Okay, thank you.
Well done, Mukhtar. I found it interesting, and I found it interesting in a number of ways because we use this kind of technology. So the thing that, and I was picking up on a point that Leanne had said earlier, I was really trying to understand the differentiator. And I think what might have been really useful in your presentation, if you'd have expanded on what those key performance indicators were, so that they could have resonated with the audience more, because I was left kind of still trying to really wonder what they were. But can you just explain where you are on the technology side of things then at this moment in time? Is that developed? Is it your minimal viable products? And how much cash are you going to need to get it from where it is to where it needs to be to scale this?
Yeah. So at the moment, what we've got the attendee side of things sorted. So that's why we're testing out today. So everything that you can see right now is what we've got for the attendee perspective. The thing that we're working on right now is the aftermath. So the surveying, the feedback form that we're working on right now, and we're also working on the analytics side of things post-event. So from the post-event perspective, some interesting things that we've got that's really key differentiators is we've got a real-time stat analyzer. So you'll know exactly how many people are asking questions or on the page and asking questions versus how many questions were asked. So we can give you a live engagement indicator. So we can say, for example, 60% of your current Q&A attendees are engaged. So we'll make it green to show you, okay, this is really good because people are more engaged than before. You won't get that anywhere else. And so what we want to do in the future, though, is we want to be able to integrate more deeply into things like Zoom so we can pull more data out of it. So to give you a slightly more, a fuller overview of the engagement of your virtual event itself. Another thing that we do is we can tell you how many new people have come versus previous attendees. So we can say 65%, for example, of the people that are in this current event are new compared to your previous one. And so as a business that's, looking for new users or new members for your organization or new business, you can use that to say, okay, I'm clearly marketing this properly because I'm getting new people in. And where we want to get it to is in 6 months' time, once we hit those targets that I showed earlier, we're in a position where we could show the traction, and then we're trying to raise between 50 and 100,000 to really get it to a position where we can scale this really fast over time, hopefully.
Okay, just one final question, if I can. The actual price entry point is very low. Yeah. And I was wondering, have you got thoughts to your customer acquisition cost? Because I imagine you're going to have to spend a lot of money on marketing to get that down to a point that this makes this commercially viable.
Yes. We've been thinking about that, and some of the things is that we've been looking at is, of course, when we're looking at PPC and things like this, we try at the moment we're only focusing on areas. We're trying to keep the customer acquisition cost as low as possible to make it as viable as possible. So over time, but it's an area that we haven't really put money towards at the moment. So I haven't really looked at paid acquisition channels just yet to really understand what the cost would be like. But one key things that's differentiator from us to competitors that are much larger is we can keep our cost as low as possible, and so we want to really play on that factor as long as we can, just to see until we might be in a position where this particular price point might not make sense anymore.
Thank you very much.
No worries.
Thanks. Martin's actually covered specific stuff in relation to Newny. I just had one additional. I'd really like to hear your thinking on how virtual events are going to change post-COVID, speed of how you think that's going to impact then on your overall financial forecasts.
Yeah, what we're looking at, what we've noticed is at the moment in this year, we've seen a lot of people, of course, just slashing costs or just reducing spending for the events world. But then what we've started to hear in the market is they're starting to allocate a lot more than they did this year because they're realizing the new opportunities. There's a lot of companies, smaller companies especially, where they only started looking at their geographical location, and now they're starting to expand nationally or globally for their customer base. And so what we've noticed is there's going to be a higher demand for audience engagement, and there's going to be a higher demand for understanding how to really make sense of their own KPIs, and how do they produce those sort of reports to make sure that they're seeing ROI positivity in their events. And so we want to position ourselves as the go-to platform for audience engagement in a market where organizations are using this as a marketing avenue.
And I think it's Sarah who's pitching.
Yeah, I'm here. Yes. Okay, so good afternoon, everyone. My name is Sarah, and I'm the co-founder and CTO of Predictiva. So what's Predictiva? Predictiva is a technology startup that aims to make advanced AI algorithms available to more individuals and organizations around the globe. Our first product is an AI platform which helps financial traders and investment managers to trade multiple financial assets using the state-of-the-art machine learning algorithms without any human interaction. So what's the problem here? I think there's a bit of delay, right? So what's the problem here? The problem is that as per the latest research, 95% of investors lose money during trading due to emotional trading and lack of financial skills. Also, humans are not able to follow up with the market all the time, and they cannot observe multiple financial assets simultaneously. And the available algorithms for algorithmic trading are mostly rule-based or if-then models, which are limited by the human capabilities. So what's our solution? So our solution is an AI platform called Predictiva, which provides an advanced AI model that learns over time, gains experience, and deals only with facts, and it doesn't have any emotional trading. It also continuously learns and adapts from the market conditions without having to recode or reconfigure the model. The idea was inspired by arcade gaming using deep reinforcement learning algorithms, which were used by DeepMind to beat the most skilled players in Atari games, chess, and Go. So we thought that, okay, if these algorithms can consistently beat the best player in the games, why wouldn't they beat the best human players in the financial markets? And guess what? We found that they really can. And as they always say, the numbers says it all. So here are some of our back test results for 3 months, for an average of 3 months period. And we can see that Predictiva's profits are significantly higher than simply buying and holding the stocks. And it also still profitable even when the stocks are losing value, like here, for example, in BA Systems and in Delta. Currently, we have more than 10 million lines of codes. We have our MVP ready, back tested, and we have now integrated with some of the largest brokers in the world, like Interactive Brokers. And we are currently live testing with paper money. About the business model, so we have 2 different business models. So the first one is for B2B, and in this business model, we will license our model as a software as a service to investment organizations based on a per user license. We can see here that we have in the UK, we have more than 240 investment organizations registered under the UK Investment Association. Our target market is 10% of these associations, of these organizations in 3 years from now. We are not looking for them to be exclusive to us, but we are looking to have some business with them. And we are forecasting that we will have a target B2B revenue of 10 million in 3 years. Our B2C model is based on profit sharing. So we target a total management investment portfolio of 840 million, which is 0.01% of the 8.5 trillion bonds managed by the members of IA Association. And we are expecting to get 6.8 million revenue profit share in 3 years from now. Here are some of our market traction. So we have 30 pre-registered customers with a total trading portfolio of around 200,000 pounds. And we have interested hedge funds and investment banks like Cube, Avic, Goldman Sachs, Commerzbank, AJ, and some of EMEA investors. And finally, we are also a winner in the Tech Nation Rising Star competition, which will be actually announced next Monday. Here's our competition landscape. So we can see here that most of the companies available now, if they are AI driven, they only use this AI for analytics. And sometimes if they are trading, they use it only trading without any AI. But only a few actually are using AI or real AI for actual trading, and we are actually one of these guys. Here's the list of some of our partnerships and memberships. And here's the founder and advisor. So here's me, and this is Ashraf, our co-founder and CEO. We have also 3 advisors, Dr. Walid Magdi, who is a data scientist professor at the University of Edinburgh, Dr. Pavlos Andriadis, who is a reinforcement learning and deep learning professor at the University of Edinburgh. And we have Farouk Shaka, who is our financial advisor and the CEO of Watergates. Our investment round, so our seed round target is £500,000. Our planned closure date is early Q1 2021. The round type is equity, and we have the SEIS and EIS advance assurance obtained already. We are planning to utilize these funds for production release, a hiring dev team, operational expenses, legal and FCA fees. We also have some ongoing discussions with interested VCs, including Mercia, Minerva, and SFC Capital. Regarding the exit plans, we have 2 available business plans in 3 to 5 years, which will be using either acquisition or share rebuy. Thank you very much for your attention. And if you have any question, I'd be happy to answer.
Right, well, sorry, I don't really know where to start. I think would you mind just flipping back a couple of pages to the slide where you talk about funding round and what it is you're going to be using the money for? So the 4 utilization pieces there. Can you just give me another couple of another minute on $500,000, not just what on, but in what time frame, and any future rounds you then think you'll need to run?
So sorry, I didn't get exactly your question. So you're asking why 500?
So some more detail around what you will use the 500,000 for, in what time frame?
Yeah, okay. So these 500 will be for the first year of operation. So we need to hire our dev team, which is not very cheap, since they are mainly like AI experts. So they will be expensive. We will need some financial experts to give some credibility to the decisions we are taking, like the portfolio management and all of that. We also have the cloud costs, and we have the normal operation expenses. We have the legal and FCA fees, which we have to obtain in order to be able to work as B2C. So this is mainly our cost for the first year.
Mm-hmm. Okay, and what does that dev team look like? Have you got an idea of the shape of the team, numbers, what elements of the build they're focusing on? Yeah.
So in the beginning, we will have 2 AI engineers, or if you want more details, they will be like reinforcement learning engineer and a deep learning engineer. Mm-hmm. We will need a full stack engineer, and the other 2 will have 1 portfolio manager and what do you call it, like a trader or something with some experience in hedge funds, or especially quant hedge funds. Okay. These are mainly the resources that we're expecting in the first year.
Okay, great. Thank you.
Hi, Ms. Sarah. Well done.
Thanks.
A few questions, if I may. I probably could spend the rest of the day talking to you. But sure. I was interested in your company structure. So you're going to be licensing this product. Are you going to hold those licensing agreements in a separate legal vehicle?
Yeah, we are actually planning to have Investiva as a child company, but the IP itself will be for the main company, for Predictiva. So we'll be licensing using Investiva, but the IP will be owned by the mother company, which is Predictiva.
Yeah, but will the licensing agreements be held in a separate company?
The license? No, they will be.
Just the IP. Sure.
yeah, the IP will be owned by the mother company, but everything else will be managed by the child company.
Okay, thank you for that. You haven't put a valuation on the business. Could I ask what that is?
Yeah, we are targeting to give an equity of like from 12 to 15% in this round. So the valuation is between 4 and 5 million.
Okay. One of the key reasons people struggle is not because they've got a great idea, and I can see the need for this, but it's a question of, do you think you'll be allowed to play? There's an awful lot of very big, important people within this space that kind of own the playing field. And I just wonder, you know, even though you may have a better product, have you perceived what challenges you may have in actually getting into this space?
Yeah, actually, I've been talking to some people from these big players. I've been talking to some people from Citibank, from JP Morgan, Morgan Stanley, and Goldman Sachs about this product. And they told me that they actually was not successful doing what we have done here. So they will be more than happy to test it. And if it works, they might ask us for an acquisition or for licensing. This would be like a future problem, but all of them said that they will be more than happy to test the product if it's working.
No problems. Thank you. Good luck as well. Thank you.
Thanks.
Thank you. That was an interesting pitch. One of my observations was that when you brought up your competitor landscape, there were companies that were using the AI for the trading platform, but not the analytics, or the analytics and not the trading platform. So why have those companies and not potentially done a merger to give the offering what you're proposing here?
Yeah, okay. Actually, this is what most of the financial companies are currently doing. They're using AI only to get some features or some insights. They do not have a very sophisticated program to trade, actually, to take the full decision. So they have these algorithms to take 1 or 2 insights, and they add it to their human insights that they have from their financial traders and all of that. From my talks with them, they said, yeah, we didn't have a very sophisticated software that can do all of this at the same time. So we had to take only portions of the AI just to do some analytics, and we are doing the rest ourselves. Does this answer your question?
It does. Thank you.
Thanks.
I have just one comment. Looking at the market that you're in, trust is a huge issue. You seem to have a lot of credibility, and it's a very polished pitch. I was very impressed. The companies that you are competing with in that space have been around. Some of them have been around a long time, and they are quite resourced. Are you looking for an early kind of acquisition? Ideally, is that your strategy?
We are looking into that. So we are not going to go to a war against these guys. Of course, this is not a wise thing to do.
Kind of what I'm asking.
So this is why we are licensing. So if they agree that we are licensing to many companies, that's fine with us. If one of them said we want it like exclusively and they offer like something fair to this idea, we are also open to talk about that.
Okay. All right. Good. That's it from me.
Thanks.
Great pitch, Masara.
Thanks.
The problem with going last is everyone else steals your questions. So mine's a slightly facetious observation. If you can generate returns of between 122 and 923%, then surely you don't really need 500,000. Surely if I gave you 50,000, you could grow it to 500,000 for us collectively very, very successfully, and just delay your development by a few months.
Actually, this is why we are just asking for this, because first of all, we need this dev team just to accelerate the process. We can work alone, but this will take us like some time to finish, because you cannot just work as one person, and we need like all the expenses to do that. Currently, we are testing. Actually, we are already testing. We're already like live trading these days, using some paper money just to make sure that everything is working. But yeah, so the money will.
You have the results of that, because that's your real critical credibility when
we
just started real life results with real life people and real money.
Yeah, sure. No, we're just we are in the integration phase, so we have just started like only a few hours of testing, but we are working on this. So I think in like 2 or 3 weeks we'll have like a full report of the results. But yeah, as you said, yeah, the money will be only for like to accelerate the production release and to have some experts in the field, because we also need like the financial insights, not the insights to the model, but for example, how to go into a trade, how to get out of a trade, how can you how can you create your portfolio? Do you go all in? Do you go like 10% in each one? All of these things, we have some knowledge of that. I have been an active trader for like 5 years now, but I cannot say that I'm a professional trader. So we need a guy like this, and these guys are not cheap at all. They are very expensive to get. Also, to have the other thing like the legal and FCA fees and all of that. If we wait for these things, take months to get. So if we wait for like a year until we are profitable and all of that, all of this will be delayed for like 1 or 2 years after. So it's just like a boost for our company at the beginning.
Okay, thank you.
Okay, next up, we have Torch Legal. So over to Ben.
Great, then I'll get going. Hello, everyone. My name is Ben Morris. I'm incredibly excited to talk to you today and share Torch Legal with you. We are an online solicitor wills and powers of attorney for 50% of the cost that it would be to go directly to a legal firm. I'll start off by showing you the problem, because one of our customers nailed it better than we ever could. I've just quoted him here. He says, as we only needed standard mirror wills, we didn't want to be paying excessive amounts of money, but wanted legal oversight. And this is the problem in a very simplified way. Solicitors are A, inefficient, and B, relatively expensive people, and the combination of which causes them to simply overcharge for what is effectively relatively simple or simpler work. So this is what we've done. We've created a digital first set of solicitor services. It does cost about 50% of the cost of going directly to a legal firm. And we like to think of it as all the advice, just without the inefficiency. We make sure that we always include expert solicitors. For our wills, you get unlimited simple edits, which is a huge feature compared to the rest of the market. We also have free storage for life, which is, again, another recurring cost that people tend to get trapped in over the lifetime of storing their will. How are we able to obviously produce such a specific cost reduction? And the main thing is that we're very picky about who we actually offer our wills to. We don't service business owners. We only service England and Wales residents, and we don't deal with anyone that has non-UK or farm assets. Our target market primarily is couples with children, and they normally tend to bounce between the ages of 35 to 65. So what we've built is effectively a very easy to use online platform that talks you through doing your will. It only shows you the questions you need to see. If you don't have children, it won't show you the guardianship clauses, for example. And what happens is effectively you fill in all of that information. As we've seen there, a little friendly robot helps us automate the drafting of the will. But then what happens, and it's incredibly important, is that a solicitor, a regulated insured solicitor, checks the will, checks the instructions, and allows for some back and forth between the customer to clarify and to make sure that everything is in place as it would, aka all the advice, just without that inefficiency. We then send you your wills to be signed within 7 days, and often much quicker than that. Just on those wills, partner wills obviously are much more profitable than singular wills. And that's because if you see that big red block, the one impressive thing about our business model is it works paying solicitors at full cost as if you were their client. So that is a solicitor at genuine full price, checking those wills and making those amendments. Obviously, we deliver the product within 7 days. We also have a powers of attorney, which works almost in exactly the same way, but because of the really quite important nature of these documents, we do require everyone has either a solicitor or a video call, a solicitor phone or video call. And that then ends up with us making those same amendments, those clarifications, again, all of the advice without any of the inefficiency. However, these products do take much longer to deliver to completion. That's mainly due to the government and the speed of registration. However, as you can see here, past LPA number 1, LPAs come in 2 types, financial and health. So if a couple was to get 2 each, they'd obviously get 4. Above 1 LPA, they become dramatically more profitable, as you can see in the green, than wills are. But they're a much slower sale, much more considered sale. As you can see here, again, the solicitor occupies a big chunk of that. It's us, again, paying full cost for that, but the business model still works. We'll be hopeful in the future, obviously, reduce that through either hiring a solicitor or working to reduce that cost. As you can see here as well, the government registration fees also take up a large amount of that fee. The client pays us and we pay that all to the government directly. To run this business of ours costs us around £80 a month. It's an incredibly lightweight business model, and all of the rest of our costs are incurred after the point of purchase, which means in terms of working capital, we are incredibly lightweight. Here's how our sales growth is going. In our 4th month of trading, which was last month, we closed £1,452. Obviously, that's triple what we took in October. What we've found out, though, is it's a highly considered purchase. Our funnel takes a while to move down. We often find that our customers take 5 or 6 visits over a period of weeks before even starting the forms. But what we do know is 80% of those who do start their forms on the wills and their LPA finish, and they pay. Right now, we've not done any PPC to cause that growth. That is primarily word of mouth and also other referral partners that provided us with all of that growth. So what does the market look like? It's an interesting one. It's highly, highly fragmented. There are literally thousands of will writers out there. Will writing is an unregulated market, which means that any one of us could class themselves a will writer and there'd be no issue with that at all. Obviously, we know the solicitors. There is this element of the online market, which I would class as cheap and automated, often with some level of solicitor supervision. And what I would see as the modern pretenders, Fairwill, one of the biggest and well-known, they raised a £25 million round recently. And what they do is they provide a nice online experience. The huge differentiator between us and the modern pretenders is that we have solicitor advice. These guys use will writers. And obviously we know that could be anyone. How are we better than solicitors? Well, we are solicitors, but just at half the cost. And that's what we do really, really well, obviously on the simpler side of these things. Will writers, we believe we up the level of service towards them, and the same with the cheap automated people online. In terms of Fairwill and Quill and beyond, we are price comparative as well, which obviously is a huge benefit for us. So what are we looking like in terms of the market? 4 million adults make a will every single year. That's about £300 million a year market. We estimate that around 2 million of those would be torch eligible with the criteria I mentioned earlier. And even if we were to only gain 1.5% of those 2 million, for us, that would be a £1 million profit before we even look at changing the operational structure. So what are we going to do in the future? Obviously, we are paying a partner to be our solicitor, legal partner, who is a SRA regulated organization. We pay them at full price, and we could reduce our operational costs hugely by hiring a solicitor. That would also help us open the door to getting SRA regulation for ourselves, which would subsequently open the world of different products to us. The wills, probates and trust market, for example, is £1.3 billion a year, and we'd start to be able to add lots of different legal products with the same mentality, which is all the advice, but without the inefficiency. And whilst we're not looking to primarily fundraise right now, we're growing well within our means and we're happy with how it's going. We would be interested to talk to anyone who would like to start any conversation potentially for slightly further down the line. So who are we? My name's Ben. I'm incredibly passionate about improving people's lives through technology. That's what I do. This is my second startup. I have all the scars from my first one, which is a company called Ogan, founded in Spain. My founding team are Tim Eagle, finance manager in the legal sector. He's also an entrepreneur in his own right. And Andrew Eagle, where we get our unfair advantage from the fact he's a managing partner of a local law firm and hugely experienced in the wills and probate market. So we'd love to get in touch if anyone wants to ask anything about wills in general, and I will never miss a chance to advertise to any group of people. I'm sure there's people out there who don't have a will or who need a power of attorney, and if you use the code LSA20, we'll give you 20% off. Thank you so much for your time.
Well done, Ben.
And I'm going to start, if that's all right. Great pitch. I love the sell at the end. Never miss an opportunity. Absolutely. You know. If I didn't already have one, I'd come straight to you, and I did pay full price. Can I ask about your insurance?
Yeah.
Do you offset all of your insurance through your solicitor partner? So you carry no professional indemnity insurance as a business?
That is a wonderfully insightful question, Russell. Right now, we do effectively pass that on to our solicitor partner, but as we grow, I think that would be both ethically and sensibly for us to take some of that burden as well.
So when you hire your solicitor, you're gonna the on costs.
We would
of onboarding are going to be really quite high. I mean, above the salary costs.
Yes, they will be, because we'll also look at then, there's also other hoops, as it were, to jump through for that SRA regulation. It's not just merely hire a solicitor and get SRA regulated, but still well below what we'd pay the solicitor for in terms of that operational cost that we currently pay.
Okay, just whilst I've got you, I'm going to hog the space for a minute. Secondary question. I've seen over the last 10, 12 years, several other people try this in different areas of the legal market and saying, why would I pay a solicitor 300 quid an hour when I can do something online? Why have they failed and you're going to succeed?
Yeah, I think that is a very good question. I think some of it's timing. I think 10 years ago, the world was a different place. I think we know that. I think some of it's, not to blow my own trumpet, but it's my background of other startup, other digital products that we get to bring to this. Not that it's me particularly, but the mindset of how we provide overwhelming value and lack of friction. I think that's, for me, that's a real key to it. And but ultimately what we're seeing is that the people are younger people are growing up and having children and concerning themselves with wills. And I think that mindset shift of, we've got the younger end of our market, the reviews we get from them, their benefit isn't even necessarily the cost implications, it's the ease of use implications. And that's what we're seeing in terms of that shift. So I think you're right. Does it mean we can get to be a really massive player? I'm not sure, because the legal market is a really interesting one. But I do know that we've seen a shift even within our relatively small customer base between that.
Okay, thank you very much.
Hi, Ben. I'd like to ask a question, and
Great.
Well, in two parts. And the second part might shoot my first part down, if I'm being honest. So, what's your gross margin per transaction?
Yeah, great. So we'll go back. So obviously, my finance manager is somewhere on the call anonymously, so I'm going to do my best. So we'll start with wills, if that's all right with you.
Yeah.
So yeah, that's our margin is obviously that 59 or that 19. Percentage wise, I have got the spreadsheet up if we want to be.
That's okay, I can work that out. That being the case, I was wondering if there was enough margin, which is probably there may not be, but actually to partner with and get referrals coming in from other legal firms, because I can't imagine this is if you're attacking their segment, I just wondered if they'd be happy to partner with you, and that could be a form of distribution for you.
Yeah, so I'll answer that incredibly good question in two parts. The first part is this blue part here, I didn't mention it, is our customer acquisition cost at its biggest rate right now. And that is effectively 20% that we've assigned in our mental budgets to give away to make the business model work. And we have partners referral partners in the IFA and employee benefit provider market, where we give them 15% effectively to refer. We give, between a discount and a referral fee, we give that to them to then get that referral in. We've not thought of doing that on the solicitor side because it seems quite competitive in that sense. However, one thing we have done is could we sell our engine to help those solicitors provide their wills, or could we do something else? That's still something that we're trying to solidify in terms of strategy, but I think it's an exceptional question to ask. But that blue part is our acquisition budget in that sense.
I did write down white label question mark at the beginning of the pitch, but anyway, I'll stop talking and let someone else ask. Thank you.
I have a quick question about the future. It's not really a question, it's more of a statement, but one of the first services to be replaced by AI, especially IBM's Watson AI computer, was legal services, and at the bottom end of that was things like wills and standardized transactions. Does that bother you that it's the first thing to go?
That's quite a philosophical question, I suppose. If it bothers me, I think the thing I see is let's take wills specifically, and let's leave powers of attorney for a second. A very small change or mistake in your will can have huge ramifications for childcare, for money, for family. And for me, that risk and that peace of mind, most of what we actually sell, I suppose you could argue, is that peace of mind that you've had that back and forth between the solicitor. And I'm not sure everyone will always necessarily be that happy in that. But I suppose I sound like an insurance agent from however many years ago. So no, does it bother me? No. I think if you look at how lightweight our business model is, we can easily pivot in many directions if we needed to, including becoming our own AI will provider. We have the know-how, we have the internal knowledge and experience to be able to do that. We're incredibly flexible and it wouldn't require much change. So does it bother me? Yes, in terms of emotionally, I think people can have a good level of service. Does it bother me in a business strategy sense? No, because I think we could adapt incredibly fast.
Right, well answered. Good man.
Ben, it's Sam here.
Hello.
Thanks for that. Hi. Two, I think, interrelated questions. You showed the revenues that you brought in for the last month. I think it was around £1,500.
Yes.
Very specifically, how many transactions was that?
Oh, that's a great question. That's 17 customers.
Okay.
And as in, sorry, 17 since the start of August.
So, okay. And you refer on that slide to obviously it's been all word of mouth referrals, and you just related or referred to referral partners and paying them 15%. What are your other plans marketing wise to grow? Because in particular, given your demographic that it sounds like you're going to be targeting, it's not just going to be from referral partners and word of mouth.
No, so our referral partners are actually incredibly effective, way more than we thought they'd be, especially the employee benefits people. They're really, really effective. So some of our growth, we've only got 3 partners right now. Some of our growth is going to be adding more there. We've also started to collect IFA referral partners, which again, we think will be helpful because what we've also found is when we get these referrals, they convert in a very advantageous level with 20+% through the employee benefits providers and 80+% through the IFAs. That is an incredibly effective and I suppose cost controlled because we already know what that's going to cost us in that sense. And we don't actually pay the IFAs a referral fee. We just give their clients a discount in that sense. In terms of wider stuff, clearly we need to tap into things like PPC, especially on the Google side, because what we've seen is that you need people that are considering these products. You cannot convince someone they need to buy a will in of that moment and they just go and they buy it. It's an incredibly considered purchase. And some of that means we need to be tapping into a warm market. And it's such a considered purchase that whilst we have blogs that explain certain things around wills, the dangers of not having one, all of those other different elements, I'm not sure we should be fully responsible for that full consideration cycle, but when someone's ready, we need to be there. And that's what's going to be our focus especially in terms of like the Google adverts. And obviously we've never put money into the company to market. We've done a sort of eat what you kill, if you allow me to say that quite crude phrase. So we've grown very, very naturally in that sense. So once we get to the point where we're capable of doing that, we will test accordingly. And I would see a full spate of PPC across, I think YouTube might be helpful, Instagram potentially, because of there's a load of eyeballs there. But to be honest, I think good old fashioned Google ads might be really helpful for us in terms of gaining customers that way.
Thank you very much, Ben. I think most of the questions have been answered, but one of mine was, wills is an unregulated market and there are a lot of players out there. So I'm just interested in really what is that unique differentiator. And whilst you've explained that to us, how do you convince then the public that yours is a better option? If I Google wills, there's a million that come up. So why is yours better?
No, I think that's an amazing question. I think we do have some like genuinely unique benefits of using our service, like the edits for free and like the free storage. Like that's just a really big tick in terms of stuff that elevates our service. I think longer term, in terms of how we convince it, it's hugely about social proof. That's what we've seen. The people that pop their head out of the market is because they've got a customer base that's been happy with their service and they really trust it. And you see that because you could almost plot market share to Trustpilot reviews, almost, in a lot of ways. But also, we're not going to just stay around in wills. I think wills will grow a lot for us. And obviously, I've mentioned it a lot today, and it's probably what we are arguably best at. But our powers of attorney is a great service as well. And that, with the video call, again, it starts to pop us in this place that's different again. So I would say, how do we differentiate ourselves? I think we'll differentiate ourselves by adding other products to ourselves. But the products that we do have, they have these added benefits included within the cost that do differentiate them from the others out there, such as the video call on the LPA side, such as the unlimited edits on the will side and the free storage.
Okay,
but social proof.
And I'm not sure sort of like the complexity of people that you're aiming at as well, but one of your other outlets for a market maybe around personal tax planning as well, linking into the wills and
so we'd
attorneys.
have to, they'd probably, I would argue, they're a bit more complex for us. People that start to hit the IHG limit, we would advise them away from us in certain stages. So we sort of say no thank you on the whole.
Thank you.
Next up, we've got Voucher Box. Ahmed.
Yeah, so I'm developing Voucher Box, CRM for car dealerships. And I'm a developer developing SaaS products for years now. And so what we found is that I was working with some car dealerships before, working on bespoke software for them. And while researching, we found that there are not many cloud-based solutions that could help the car dealerships to manage their customer data at the same place and do the customer engagement and increase their brand awareness. So we came up with this platform in which all these things are in one place to help them. So in this solution, what we provided is that we allow them to add customers from their existing CRMs or through uploads. And then it relies on the core value of loyalty schemes, which will increase the engagement and let the customers engage with the brand using the portal, which is, again, brandable and white labeled. And we use the notifications to increase that engagement. So we found that there are other solutions out there which do similar things. But what they lack here is that either they are very expensive and they are good at one thing or the other. Some of the ones that are very generic are really not good fit for automobile industry, like HubSpot and Pipedrive, and they're very hard to integrate with the platforms that are able to provide the loyalty schemes. So what we're looking at this CRM that we're developing is that we are bringing these things together. What the competition we have there is like these two, which I've listed here, Voucherify and Loyalty Prime. And in these that, for example, for Voucherify, we found that they have a very hard limit on the redemptions. For example, for €59, you get just 1,000 redemptions of vouchers, and then obviously you have to buy the add-ons. So also it does not provide the customer portal, and it does not provide the white labeling. So the dealership's brand will not be there. It will not promote that much. So we have provided a solution which has the best of these both, and we are taking our price down here. Obviously, it's but we're doing it in a way that it is a SaaS-based, it's totally cloud-based, and it's very easy to sign up. The thing we found with Loyalty Prime is that it is mostly manual. It is an onboarding process there. And it is like, it's not totally fully SaaS-based, fully cloud-based. So we have provided very easy to use, easy to set up, and easy to brand and easy to customize, easy to customize platform there. So over the course of the accelerator, also we found more ways while we had discussion with, while I got engaged with the mentor, and we have found that we could cut more costs in terms of having our own servers and relying less on the external APIs. that helped us a lot in terms of addressing those costs there. It's very scalable because it's going to be subscription based. Those dealerships will be able to sign up smoothly, and then they will have a base package in which they can set up their customers. There will not be those tight limits that we see in other like Voucherify or other CRMs. And also they could also have the add-ons such as having a white label mobile app, which again they can deploy and have that more customer engagement with their individual brand. And that will nicely integrate with the whole system. And it also integrates with their other third parties using APIs and their internal system that they already use. While I was researching on their system that you're using, we can also take that route in terms of if we can approach those brands and who are providing these softwares to push this software down, so the dealerships will be encouraged to use that as well. Okay, so in terms of the industry, what we found that there are like 12,000 plus car dealers registered Auto Trader, and in Europe we got 15.3 million new cars sold in last year. So it represents that there is this industry is huge, and we'll be looking at this market which is competitive for the car dealers, and in this way they'll be able to have an extra edge over their competition by have that more engagement and more awareness. Again, there are once somebody buys a car, there is a less engagement due to the long service cycles, and using this platform, they'll be able to have that continuous relationship with those customers. So we're looking at more sales there. All right, so where we are at the moment, this platform is still under development. We have done the prototyping. I've tested it in a different format before with a group of car dealerships, which was very promising. But this platform as a SaaS, we are looking at launching in 1st February 2021. And we'll be developing it over the course of next year, adding more features into it, and making it available along with the mobile app. That will also be a very attractive point. And we're looking at 50 subscribers in 6 months' time, hopefully. And then we'll be looking at in September to go into investment and further growth, and so that we can increase that 60K revenue, maybe adding a figure to it, another zero at the end of it. So yeah, so that's it. And you can go to voucherbox.io. We have a very nice video there with the prototype, the user interface and everything. And yeah, any questions?
Well done. I'm going to propose we make a slight change. The time's gone completely. So with the panel members, could you, instead of clarification and follow-up, could you also deliver your sort of, final assessment and summary? We won't revisit these two, but we will revisit the first 5 just to give them that sort of the follow-up. So yeah, this is a clarification follow-up, but also your sort of overall feeling, your assessment, what's good and what's not.
Hi, Ahmed, well done. Can I just ask, if all things went to plan, you got your wish list and you actually delivered it exactly the way you were hoping to do, what would that look like? 3-4 years from now, what does this business look like?
Okay, 3-4 years down the line, what I'm looking at, because there are no other CRMs out there which are targeted automobile industry in this way. We have, as a whole, as a SaaS product. So we are going to have an edge there, and because we're going to be first in the market, and I'm looking at a lot of acquisition there. I haven't done, to be honest with you, that forecast yet, but by looking at the market, I think that there is awareness there, because these platforms are already running with although with these hefty price tags. So we need to we have a place there to capture the market there.
Okay, so in summary, my takeaway from this was I probably didn't get enough out of this to maybe be able to reach a conclusion, in honest, but I was really interested in the end game so I could try get a figure to the scale. So you might want to consider putting something like that in a pitch so somebody can see where this is likely to go. But thank you and well done.
Cheers.
Hi there. So I'm actually on your website at the moment looking through. You've looked at a couple of competitors out there. To what extent do you think that, because you're clearly specifically automobile industry focused, to what extent are competitors outside of the industry on your radar as well?
Yeah, so in terms of out of the industry, there is HubSpot, there's Pipedrive. They're very generic. They're focused on the customer and not the loyalty schemes, not the membership clubs or nothing like that. With this, we are creating a brand club for the customers. So at the moment, we are not competing with them directly. This one is for, obviously, we are marking the territory here for automobile industry CRMs.
Okay. Yeah, okay. So are there other non-generic, so specific to industry CRMs that may not be within the automobile industry right now that could, rather than you building from scratch, but that could transfer cross-industry?
You mean that to have the similar thing for other industries, I should approach other industries?
No, yes, I meant the other way around. So I'm still looking outwards to competitors. So yeah. Other competitor CRM and brand loyalty and discount products that are within other industries, but are industry focused, but that could flip to the automotive industry.
Yes, I think they can, but their focus at the moment is more generic, so they can't be, probably be not. They won't be able to do that because there are lots of other industries out there. So it's in their interest probably to stay generic. And for example, Workwyse has a focus on APIs. They're focusing on developers. So their target market is CTOs and developers of those big boys out there to give them an easy option to integrate the CRMs with them. Whereas we are providing the whole solution.
Okay, great, thank you. So I think my feedback is I would like to know more about it. I feel as though you've kind of whet my appetite, but I still haven't quite got under the hood in terms of exactly what it is and your differentiator is. And that, so good introduction. But I would like to go away with a feeling that I genuinely understand what the differentiator is at this point.
Yeah, so our core program here is the loyalty schemes, which those car dealerships can set up, and other part is customer portal, which acts as a communication bridge between the brand and the customer. Customers feel like part of that members club or VIP club. So that is our core thing is there. That is white label, that is brand label. So the customers of the dealerships will be interacting directly with the brand. So that is the core thing out there. So yes, right. I need to work a bit more on that part to explain them more clearly in the presentation in the future.
Great, thank you.
Yes.
Thank you, Ahmed. My one question really is still I keep coming back to in terms of the automotive industry. What is the real benefit or the real tangible benefit that they're getting out of subscribing to this?
Okay, they are getting out of it three things. One is the engagement, and second thing they're getting out of it is that they will get the analytics and reports, of course, in terms of how the engagement has been working with them. And third thing is they're getting a central place. From there, they can run campaigns, whether it is reward schemes, whether loyalty schemes, whether the marketing campaigns like email marketing and push notifications. So it's a multi-channel communication tool for them, really.
Okay, well, it'd be interesting somewhere to see there how you think the level of engagement would increase by utilizing your tool, and therefore what would that mean to the brand in terms of increase in revenues for them, which is clearly, I'm sure, what they'd be looking for.
Yeah, so we have a dashboard there which will provide the reports, all sorts of reports that how many people have activated, how many people have used the system, how many people have redeemed the vouchers, and which schemes are running better than the others, things like that. So we have done this similar kind of reporting thing before in a different capacity. So because I have experience in that area that it works, and how we're going to do the ROI for the dealerships. But because this is going to be SaaS-based product, so we have to develop it in that sense now.
Thank you.
Yes.
My questions are very similar, so I'm not going to repeat them for the interest of Sam's time, because he'll tell me off because we're running late. I guess my biggest concern is that this is still a very copyable business. And if somebody was to identify this as a really attractive market segment, you could build this on a HubSpot template. You could build it on an existing CRM with very clever functionality, and then scale it out to the market. So my first question would have been Martin's, which is, how big are you going to be in 3 or 4 years' time? What's your penetration look like? What's your turnover look like? What's your valuation look like? Because any investor is going to want to know now what he or she is likely to get out in a few years' time.
So in terms of that, if for example, if we have 50 subscribers by the mid of next year, so that means we're gonna have a 60K turnover for that. And if we are going to, what I'm looking at in 2 or 3 years is 600,000 turnover from it. So that if that is a rough idea at the moment. But the thing is that we're gonna have add-ons on top of it. This £100 price tag is just a baseline, just starting, and obviously there's a margin then where we can increase it, and it's not going to be £100 at the end of the 2 years, of course.
Okay, so I guess my feedback to answer Sam's point is I'd like to see more. I'd like to see a slide that just shows a financial chart, a financial graph that shows how big you can get and how quick you can get there. Because I'm slightly worried that if you're going out to investment in September next year, when you've only got an annual revenue of 60,000, you're probably going out quite early, and you're probably going to end up seeding quite a lot of your business. But I don't know how much investment you'd need. So that's me.
All right, thank you.
I've just got one comment based on finding customers, but also the name. I think we mentioned the name last time. Have you thought? Do you want to think about a different naming strategy, given that there's already a Voucher Box out there, quite a big company?
Yes, Voucher Box that I've checked with our trademark, and that has been that is a Voucher Box, so we renamed it to Voucher Box.
No, I don't think that's far enough. I don't know. I've been caught with people over names before, and that's pretty close. There's no way that'll fly. Anyway, but that's something for you to consider. I worry about where you get your customers from. That's all. So my biggest, the articulation of the value was a little bit vague for that market, but finding those specific customers in that window between dealerships and tiny firms that aren't bothered, it's quite an unformed market slot to me, and I don't know how you connect with them. I just don't know what the channels are. You maybe do better than I do, but.
Yeah, regarding that, we have I've identified 2 routes to market here. One is through the small car dealerships and van dealerships, and what I've seen the other softwares they're using for point of sales and for the websites, and they are spending at the bottom for the websites like £200 a month for them, and this as an add-on for them to give that extra sales for them. And considering that the other platforms that they are using, for example, Loyalty Prime or Voucherify or other point of sale systems that are bespoke that they're using are very, very high, with a very, very high price tag, and also very not easy to sign up and easy to use. They have a tedious onboarding process there. So this is going to be very, very approachable for them and very easy to sign up and sign on. The other route to market we're looking at is from the brand perspective. For example, I could approach the Volkswagen or Audi, and they recommend softwares for their car dealers. So we can integrate it with their software and push it down the chain like from there. So that is another avenue that I need to explore.
Yeah. Okay. Interesting. Thank you for that.
Last but by no means least, Workwyse, your last because it's a W. So we've got Hamza.
Okay, so just a little bit about myself. I'm the founder of Workwyse, and my experience lies primarily in business operations and management. And also more recently, I was actually working at a marketing agency on the biz dev side of things as well. Now, one of the biggest problems that I found on the client side as an SME is actually finding competitive pricing and finding transparency with marketing agencies when we're actually looking for marketing agencies. The time it took as well, I mean, we had to collate, 4 or 5 quotes. We had to wait about a week as well before we could actually select an agency. And it was difficult to actually trust them right from the outset. Even with leveraging our network, we found it quite difficult to know that we're getting competitive pricing. Now, on the other side, working at an agency, we found that the lead gen tools, the current platforms, the advertising methods tend to get quite expensive because everyone tries to do their own marketing within the marketing side of things as well. Also, it's very hard to actually gauge the intent, the buying intent of the prospects as well. And to actually establish the point of connection as well, you have to do that before you can actually build a relationship. Now, the solution for that is to centralize everything for buyers and the sellers as well. Look at the prerequisites and the requirements, match users based on the location, budget, and the industry experience, which is actually quite important for agencies because agencies tend to have a large amount of experience within one industry in particular. And the other part is to actually aggregate all of the ratings and reviews into one place as well to establish that level of trust. Now, in terms of validation, we've seen a huge increase in terms of the marketplaces that are already out there. Bark as a horizontal marketplace has grown massively. The last time I checked, they see about 28 queries for digital marketing alone within the span of only 10 minutes because they show you when you post a project. Meet Hugo is still growing even during COVID. They've hired another 16 people for lead gen, especially for marketing as well. And now Zoomer, the marketing technology platform as well for PPC automation, they've launched their own marketplace for marketing services also just this year. Now is the best time to do this because B2B online marketplaces are seeing rapid growth. So there is something quite powerful to be said for online purchasing and outsourcing as well. We've seen the outsourcing market rapidly grow because obviously marketing being one of the specialties, it's difficult to keep those sort of things in-house as well. And COVID has also helped accelerate this as well as people are moving online. In terms of the buyer journey, it's quite simple. It's the buyer posts their project, they put in their prerequisites, their budget, etc. One of the key points is they select their buying stage, and it's one of the 4 below, such as doing their research, where they're ready to hire. They get matched with agencies, and they can send their post to up to 5 agencies. So that's the buyer journey. Now, on the other side of things, on the agency side of things, they add in their details, such as their rate card and location. They get matched with the buyers, and they can purchase the buyer's project and contact details. And we have a price based on the buying intent of the users. So it's regardless of the transaction. Point to note, we facilitate communication right now, not the transaction itself as well. You can go off platform, you can do that part. We don't take any part of that. Now, those buyer details, we ship them out to up to 5 agencies, and then the post is closed to ensure a level playing field. The business model, so what we can make per post, this is assuming that 5 sellers respond and purchase those contact details. We can make between £50 to £125 per post, so there's an average of £8 to £7.50. We also have a secondary revenue stream, which is a claim recovery partner who works with us, and any business that we send, any user that we send over to ICEBA, we net a commission based off that, any user that goes through their platform and system. The tertiary revenue stream that we'd like to add in is to allow buyers to purchase directly from the sellers as well through our platform, so we hold the funds in escrow and release them when things are ready. So we can have ideally 3 revenue streams here. Now, in terms of the market adoption, because I've worked on both sides of things, I've worked on the targeting as well. We've looked at the seller persona as well, the agencies. I have over 1,000 connections with marketing agencies on LinkedIn alone, and I keep in regular touch with as many of them as possible. In terms of the buyer persona, we've identified the kind of SMEs that need this, and they're primarily ones that are too small to have their own in-house marketing team, but have enough revenue to actually outsource their marketing. And also, if they are searching through, let's say, Google, Facebook, or LinkedIn as well, we've identified the different channels as well. So there'll be PPC, you'd see the advert. If you scroll past that, we want to increase our SEO over time as well, so you can find our platform. And also there's less friction, as we're not an agency ourselves. We just have an inventory of agencies, and we are the middlemen there. In terms of competitive positioning, we've looked at our most direct competitors all the way from Marketing Quotes to the Digital Agency Network, Agency Spotter. We've seen the benefits that they provide, and this is where we are currently. So in terms of the transparency of the pricing, which is very important nowadays as well, especially as millennials move into the workforce, and being able to message people directly and having a self-serve system. We verify suppliers through Companies House API as well, so we can actually say, are they a registered company? So there's a number of methods of what we have there. And the ROI is also clear as we're not subscription based. And these are some of the competitive advantages. I'd say the most important one is our team. We have probably the most well-rounded team you'll see, because we've got everything from marketing and direct sales, all the way to product development and management, all the way to user experience and analytics as well. So it's very well-rounded, which I'm going to show you in a second. It's scalable because there's no manual entry. Everything is automated from buyers and sellers as well. Our overheads are very low, and we're focused on the outsourcing market. We own all of the equity. Our platform is owned outright as well, and our name is also trademarked as well as Workwyse. Now, this is the team. So there's myself here as a founder, sales and marketing, and operations and management. We've got Mo as the user experience and analytics, and Shabir as product development and management. He has over 35 years of experience in tech as well. External partners, these guys are important. Now, WSA, we get preferential rates for marketing, for paid advertising in particular. We have a SEO specialist as well that we see around 50% of the saving using, working with her for our SEO side of things. And we have a strategy in place as well. And I see, as I mentioned earlier, our commercial partner as well for Train Recovery. 2020 so far. So in 6 months, we've gone all the way from market research, ideation, incorporation, all the way to actually launching our MVP now as well in November. We've registered the trademark, everything has been done. We've built up those relationships with agencies, as I mentioned. We have a wait list of around 30 agencies now that we've got all their, their details that they're waiting for this to launch. And yeah, so here we are. This is our launched MVP. We've actually just launched this week, and we're going to start onboarding from Monday onwards. So this is just a very quick snapshot, exactly as it says on the tin. You can compare and connect with marketing agencies. You click a button, we get your geolocation, put in the service, we put you through. The whole process takes less than a minute. In terms of the network effects, now these parts are quite important. Right now, we are only serving marketing agencies. The buyers we're going to get are going to be within those other verticals and categories that you see. And this part is quite important, because when these buyers start using our platform, we can contact them in the future and say, hey, you guys bought marketing services through our platform. Would you like to sell your services also? And we can start layering on this marketplace with accountancy, HR, training services as well. So it actually helps us not just focus on marketing advertising. In terms of financials, we're looking for 150K for and giving away 20% of equity. That breaks down primarily into marketing, because the product alone is primarily done, although it does need some layering with platform development. But primarily it is marketing, and that is a mix of direct sales, PPC, and SEO as well. And also hiring key staff as well to accelerate this process. Now, you can see the graph below. This is based on keyword research. We've looked at average conversion rates, quite lowball conversion rates as well, and the forecast that we'd have with and without funding as well. And the main milestones we're looking to reach in the next 12 to 18 months is to unlock those additional categories, unlock that tertiary revenue stream of taking a commission per sale, reduce the acquisition cost as well, and add in the aggregated rating system as well. So you can see a seller's complete picture, all the ratings and reviews from Trustpilot, Glassdoor, Facebook, Google, all in one place with one number. And yeah, that's everything. Thank you so much for listening.
Thank you ever so much. A couple of questions. I think on the slide where you looked at what you do, what Workwyse does compared to competitors, there was an element around verifying companies on the platform. Any issues of liability there in terms of you kind of signing off the services or what has been uploaded independently by those suppliers?
What we do is we look at people or companies who actually put in their company number or the company name, and it automatically searches and they can put it up. The main reason behind this is to give the buyers just a view, just so they can see and say, this is the company name, and this is their online registered name. That's how we're saying this is additionally verified as well. And also we're adding in Trustpilot, Glassdoor, and Facebook as well. So you can actually see the external links that you can go off. We're not saying that we control any of the verification, but we just help you establish that trust.
Okay. And barriers to entry of someone else picking this up and rolling it out?
There'll be 6 months behind us.
Okay, so it's a time.
It would genuinely be 6 months behind us. Yeah, it's a time investment. We do have a product roadmap as well, so no one knows really which way we're going to go. I mean, you can look at marketplaces, but you don't know how they're going to gamify it. What is their product dev roadmap? Are they going to add in a mobile app for sellers as well who are out on the road after COVID? There's all of these considerations as well as the way it's going to go.
Yeah. Okay, good. So really, I know hugely time pressure. I thought it was a very good pitch actually. And my particular positive was around, it's a well-structured pitch, you present well, and you're very clear in terms of what your ask is. So, you know, that's always great as far as an investor's concerned. My pointer would be, both in terms of the two areas where it's left me with question marks, is around the competitive positioning and barriers to entry, but also the kind of the wheel picture where you were looking at leveraging the network and sort of you're springboarding from marketing area into potentially you know, accounting, legal services, etc., etc. I think if that's driving any decent proportion of your future revenue and profitability, then it comes across as a very easy thing to do. Actually, I think that's probably pretty tricky and a decent amount of work. So I think there's probably a fair amount of sort of communication that you could do around how you get from just one industry into others, and the reality of moving from one to more is significantly more tricky than you kind of highlight here.
Thank you.
A couple of quick questions. My apologies, I was only jumping in because I need to go for a pre-arranged appointment. But well done, great pitch, really understood, nice and clear. I thought your valuation was sensible. I don't get to say that to many businesses. So congratulations on that one. I was interested to know what was the current cost of customer acquisition for a legal firm, for a HR firm, etc. Because this seemed to be, the solutions seem to be very cheap for them. Now, I realize you're not giving them a customer, you're giving them the potential of a customer, but £10 seemed very cheap.
Right, okay. So the actual acquisition cost currently, the way it stands right now, from what we looked at keyword research, tends to sit between £23 and £43. And that's to acquire the buyers to actually get that demand in. But because we can actually take that post and ship it out to up to 5 marketing agencies, we can see 5x. If they're, for example, if they're looking for quotes, let me just go back to it 1 second. This part here, if they say they're doing their research, that would be 5x of that is 5 agencies response. So we can at least see £50 of revenue, and our acquisition cost would sit between 23 and 43. But this is the idea, to actually say that, well, rather than just doing paid advertising when they're bottom of the funnel, when they're doing Google searching, let's say, it's actually increase our SEO rankings. And I believe it's the most important thing because it's online equity. You actually increase your organic rankings. So what happens is that link stays there, the paid links go, and your acquisition cost massively reduces.
Working with a lot of these people on a day-to-day basis, the big accountancy firms, the legal firms, etc., I'm just aware of what they pay, and £10 seems cheap. But anyway, that was just my interpretation.
Yeah, I mean, we're going to focus and verticalize primarily on marketing at the moment. We're going to try to target those other sort of verticals and categories that I mentioned, such as accountancy, HR, legal. It is difficult to target them through paid advertising initially, but at least we can see revenue from other SMEs who are not within those spheres. And then we can take a view on it down the line and actually see, is this worth going after? How many users do we have who came through who are within accountancy, for example?
Okay, I really resonated with the problem, by the way, having tried to find a marketing agency myself, and the challenges of doing so and going out to my network and referral. It's a challenge. So I got the problem. But thank you, thank you everyone else for your time. I'll leave the call. Sorry, I've got a pre-arranged appointment, but Thank you very much.
Thank you very much.
Thank you, Martin. I'll catch up with you next week.
See you, Martin. Hamza, can I just follow up then on Martin's question, because it leads very nicely into a question or a query. So I recently invested in a marketing agency, and it's relatively cheap and relatively easy for us to get inquiries. Your 10 to 25 pounds per inquiry is probably not unreasonable. The real cost is the conversion of those inquiries into sales, because most of the customers that we get very poorly specify what they want. And there's that translation between a novice or an uneducated buyer trying to buy a service that perhaps they don't particularly understand. And is there any way that your process, your system can add knowledge to the buyer community to reduce that cost per acquisition? So, paying £10 for somebody who is flying a kite isn't particularly expensive, but it's probably going to cost us an hour to actually understand what it is they want, to translate that into speak that we can then price. So that's my first observation, and you don't necessarily need to answer it now. Second is, do marketing agencies still use rate cards or publicize rate cards anyway?
Yeah, it's
my
not.
experience is people screw out of you what they can get.
This is very true. I mean, I've sent tens and tens of proposals. So it's been always one of those things. But the problem that there is that, especially with millennials, every time I had prospects who are millennials or anyone sort of around the sort of age bracket, is they wanted transparency. They didn't want to wait a week or a few days for a proposal to be like, right, it's going to cost you X, and they're like, well, that's not within our budget as an SME, so I'll let you know. So that part was quite difficult in terms of having that transparency. So we're not saying it's an exact rate card, we're saying it's a ballpark. So we're saying between this and it's what's your sweet spot. That's the main part behind that.
Okay, so, and in terms of feedback, really good pitch, excellent structure, very logical. You tick most of the boxes. 150,000 with a 750,000 valuation is more realistic than most that we see. I guess my negative, and it's an absolute turn off every time it says it, is giving away 20% for 150,000. No, you're not. You're not giving it away. You're selling it, and it's a real bugbear of mine. And I stand on my soapbox every opportunity to say to entrepreneurs, get yourself out of the mindset that you're giving away equity. You're not giving away your baby. You're selling something, and if you approach it as a sales transaction, you'll be a lot more successful. But no, generally and genuinely very good.
Thank you so much.
Thank you, Hamza. And I don't really have an awful lot to ask. Obviously, I saw your pitch previously at one of the earlier events, and I think it's improved massively since you last pitched. So well done for that.
Thank you so much.
Right. That's okay. Great. So apologies again for running over. It's on me. If we've got time, could I ask each of the panel just to run through the 5 previous to the change? I think it was 5. So if we could, I'll tell you what, Russell, if you could just, your sort of faces on the screen for me, if you could just run, if you could start with Sukvir's girls lead, then I'll call them out after that.
Okay, do you just want me to run one at a time? Sure. So Sukvir, I like your pitch. I guess my concerns would be treating 8 to 12-year-old girls as an homogenous group. I have an 11-year-old daughter. She is exceptionally different to the 10-year-old daughter I had last year, and I flipping hope she's different to the 12-year-old daughter I'll have next year. Their interests, their engagement, frankly, if it's not on TikTok, I'm not interested. I'd need to know more about what's in the box. If you're looking for investment, understanding what's in the box, and I recognize you only had 5 minutes, and conscious of time, I think my kind of tip, my feedback would be partnerships may well be the most appropriate route to market for you. Leveraging that scale of partnerships. I don't know who those partnerships are. It might be Young Enterprise, it might be Prince's Trust, it might be people like that. But yeah, nice idea.
Thank you.
Great. And then if you could do Megacart next, please, Russell.
So I need to understand your cash flow forecasts. I'm concerned about P&L, but I'm particularly concerned about cash flow. Having a large fulfillment hub, I think, is going to be a massive cash burn. I'm also very concerned about stock wastage. You know, you're importing fruit and vegetables to India into a hub, and you've got multiple layers of distribution. Typically, it's really difficult to blend wholesale and retail. And I think some clarity around, you talked about the network of fulfillment hubs being kind of back-end wholesale, front-end retail. Again, with perishables, I think is quite difficult. I quite like the model, and as I said in my assessment, Ocado for Indian groceries, I think you've absolutely nailed it in terms of a strapline. So to get there, I think you'll do well.
Great. Newny,
Mukhtar, I need to understand the value proposition, I think, more coherently. Despite the pitch and despite the questions, I didn't really understand the return on investment for your audience particularly. And I think you're still very early in terms of having 5 trials. I think getting some more value proposition and more ROI data and client feedback, I think, would help. But like, again, I like the pitch, very personable. People invest in people.
John. Okay, Predictiva.
Predictiva, I've seen these before. I think I saw these a year ago at the university's innovation event. It might have been longer than that, Pete will tell me. I like it. I think it's a really interesting prospect. I think once the model is validated with real hard currency rather than theoretical, you know, so rather than the if we'd have invested, actually we did invest and this is what happened. I think it becomes significantly more fundable. It's quite a big ask, but it's also quite a big potential valuation. And I think if somebody goes into it kind of full scale as a customer, that's really going to go quite a long way.
Right. And then
Ben at Torch Legal. Yeah, I like the bid. I love the engagement. Very, very credible entrepreneur. Interesting that he wears the battle scars of entrepreneurship. That's great. You haven't got quite as many grey hairs as some of us, though, Ben. I'd like to see more in P&L and cash flow forecasts. I'd like to see where this could go and how quick it could get there. Again, if you want a personal bugbear and a personal annoyance, and I don't know which book people read to get this as a way of pitching their business. That if we reach 1.5% of our target market, we get £1 million. I don't care about 1.5%. I want to know what you are going to reach, and I don't care what percentage it is particularly. I want to know what level of engagement you're going to drive to get a volume of customers that will pay this, that will generate that as a revenue. But fundamentally, no, I like it. There we go.
Great, I think that's it. Right. Thank you very much, Russell. Leanne, if you could just do a quick fire, things you like, didn't like.
Absolutely. So Sukhvir, I thought it was a really clear pitch, and so I'd say well done for that again. I think what you need to do is look at expanding your reach and also offering maybe different types of boxes depending on what the interest of the girls are that you're targeting. But I think it's a great idea. I'd also look at partnering with some big corporate companies to sponsor you in doing this, because STEM and a lack of females within that area is massive. Bav, I would say that it's a good idea. I think expansion will be very difficult for you for that whole area around fulfillment and the cash needed to do that. And I would absolutely explore the possibility of partnering with a fulfillment center if you're going to take this forward. And maybe you speak to even one of the more innovative fulfillment center like James & James Fulfillment or somebody like that. Mukhtar, I would say, for me on that one, it's what is that value proposition? And there are a lot of competitors out there that are doing this already. I get that your USP was all around the analytics, but surely that could be copied quite quickly because they've got the data and a lot of customer points already. So I'd like to see more feedback as well on that from a customer perspective. Predictiva, I like that area, but I think it was a great idea, but it's a highly regulated market. It is going to be hard to penetrate. I thought your pitch was very, very good, and all the best to you, because if you succeed, you're going to get some big rewards there. So well done. And on the wills, so Ben, again, I like the idea. I think for me that market penetration in what is a flooded market, you're going to have to be really, really clear about what your differentiator is in your communication there. And I think the difficulty is that it's flooded and it's unregulated, and they would be the two things for me that would be maybe not pitch on the will so much, but maybe move more into your lasting power of attorneys, etc.
Got it. That's great. Okay, so yeah, that's all of them. Sam, could you do the same, please? Run through any Girls Lead first.
Yeah, of course. Girls Lead, great idea. I wanted to like it more than I did. I think I was left with probably 3 big areas I'd want to understand more about. One I brought up earlier, which is the impact, so showing the impact of what you're doing. The second, the other two are actually quite linked, which is it sort of strikes me that the type of people who are going to buy these for their children or their relatives are those parents or relatives who are already pretty engaged. So how do we get to the girls that we really want to get to here, which are actually those who probably don't have the parents who are already engaged. And I think linked to that is given that it probably at the moment is more likely to be to those parents who are already engaged. Why would they go for this box versus anything else here? What's the unique proposition, and why would I, as a parent of girls, which I'm not, but if I were, why would I come specifically to Girls Lead, given what's within the box? So I think there's quite a lot of clarity and getting really specific on what's the impact and why Girls Lead, and what do you do differently, and how are you going to access the girls you really want to get to here. And I want to love it. There's a gap there for me. Megacart, Prabhav, I actually do really like this. I think in particular, given the contacts that you have, it's really interesting as to how you're thinking around the national and the kind of local delivery model. I do think that having looked a little bit outside of this, who your competitors are, I think you've got more competitors than you genuinely think you do, and I think competing on price point is probably an issue there. But I think if you can build up a loyal following, then you've probably got some legs there. I'd agree with Russell in terms of trying to get the retail wholesale aligned mix. That's focus on one or the other. I think you've got a wholesale idea here. I understand why you're trying to tag the retail onto it, because that's where much of your supply comes at the moment. But you need to focus. But I like the pitch. Mukhtar, I think you've got something here. I would agree with the others that actually you need to. You're still a bit early in terms of understanding whether or not you're going to get traction, in particular against the bigger players there. I didn't see. It's really difficult to see on the screen I'm on in terms of the report. I'd really like to understand what it is that people are getting back, because I do think beyond price that could be a differentiator. Don't know anything about the market, therefore, I'd need to do an awful lot more digging around to really understand it. But I really liked your pitch. I liked the way that you presented things. You were very clear. And I think focusing on what the KPIs are, what the report looks like, getting more into those details to sell, and then getting a few under your belt before coming back or to whoever you go to in terms of investment is probably where I go on yours. My Sarah, I know the industry a bit. It still blows my mind. I could, in 5 minutes, I can never get my head around the depth of what it is that you are trying to do. It's a bit like when you talk to someone around finger prick tests on the medical side. You think you kind of know what's going on, but actually there's a huge depth of knowledge and information there that it would take me an awful long time to get my head around properly. Fabulous pitch, really, really well articulated. You clearly know, I've clearly done this a number of times before. It's probably VC investment rather than angel, it's my guess. You're probably at that next level. Really interesting. Yeah, I would love to spend a week with you and really understand what it is that's under the hood of that. And Ben, really like the idea. Really like your articulation of what you're trying to do. You're not overcomplicating it. You're keeping it very straightforward. I like your ability to answer my very specific question. 17 people, 17 transactions over 4 months, like that kind of just understanding of your details. I think in terms of, I still didn't quite understand. So your answer to my question around marketing, I still didn't quite understand how you're going to get to your key demographic, but that's pretty easy to kind of close that gap there. I think it's a great idea. I think if you execute it as simply as you communicated it, then you've got a really good chance.
Et voila. Thank you very much for that. Really useful feedback. I think they're still all on, so hopefully they've taken notes. And so yeah, I'm going to wrap this up really quickly, mindful of everyone's time. Big thank you to the panel members. I know some of you also did some mentoring as well. Well done to all of the participants. Thank you for everyone else who joined us.